What are the penalties for unreported foreign income as a solo traveler? Imagine you're traveling solo across different countries, earning money from freelance gigs or remote work. You might think, I earned this abroad so I don't need to report it. But the truth is, if you're a United States citizen or resident alien, you must tell the IRS about all your worldwide income, no matter where you are. Not reporting foreign income can lead to serious penalties that could affect your travel plans and finances. So, let's walk through what happens if you forget or choose not to report this income. First, you need to understand the basic rules. The United States taxes its citizens and resident aliens on income earned anywhere in the world. That includes money from freelance work, online jobs, or even rental income from foreign properties. You might qualify for exclusions like the Foreign Earned Income Exclusion, which lets you exclude a certain amount of income from U.S. taxes. But to use this, you still have to file a tax return and report all your earnings. If you don't, you're risking penalties. Now, if you don't report foreign income, the IRS can hit you with several penalties. The first is the failure to file penalty. This is 5% of the unpaid tax for each month your return is late, up to 25% of the total tax owed. If you are over 60 days late, there's a minimum penalty, which can be a flat fee or a percentage of the owed tax. Next is the failure to pay penalty. If you file your return but don't pay what you owe, the penalty is about 0.5% of the unpaid tax each month, also capped at 25%. Plus, interest adds up on both unpaid taxes and penalties over time. If the IRS finds you underreported your income, you could face accuracy-related penalties. These are 20% of the underpaid amount if it's a significant understatement. In more serious cases like gross valuation misstatements, penalties can jump to 40%. And in the worst case, if the IRS determines you intentionally hid income, you could face criminal charges like tax evasion or fraud. This can lead to hefty fines or even jail time. There's also the matter of foreign bank accounts and assets. If you hold foreign bank accounts exceeding $10,000 at any time during the year, you must file the foreign bank and financial accounts report. Not doing so can result in penalties of up to 50% of the account balance if the violation is willful, or a smaller penalty if it's not. Additionally, you might need to file Form 8930 for foreign financial assets. Failing to do that can cost you $10,000 or more in penalties. For solo travelers managing their own taxes, it's very important to keep good records. Track all income earned abroad, including tips, freelance payments, or rental income. Also, monitor your foreign bank account balances to see if you need to file additional forms. If you realize you've missed reporting income or filing required forms, you can sometimes reduce penalties by coming forward voluntarily. The IRS offers programs like the Streamlined Filing Compliance Procedures, which can help if your mistake wasn't intentional. Beyond fines and penalties, unreported foreign income can cause other issues. The IRS can place liens on your property, garnish wages, or even restrict your passport if you owe a large amount of back taxes. This can make international travel more difficult, especially if you're planning to keep traveling long-term. To sum it up, always report all your foreign income on your U.S. tax return, even if you think it's small or temporary. Be aware of additional reporting requirements for foreign accounts and assets. Not doing so can lead to hefty penalties, legal trouble, and travel restrictions. If you find you've made a mistake, consult a tax professional and consider voluntary disclosure options. Staying organized and honest about your income helps keep your travels smooth and worry-free.